Good morning, everybody. It's Friday, April 21st. We've got a big grain show this morning. Big crowd here. Brian, Mackenzie, good morning. How are you guys?
Good morning, Joe.
Good.
Okay, where are we going to start?
So we're going to talk about Chinese soy demand. It is weakening.
Yes.
Traders noted this week that premiums at Brazilian soybean ports have fallen to historical lows due to a combination of a huge Brazilian crop and weakening Chinese demand. Soybean crush margins in China are poor. Analysts interviewed by Reuters estimated this year's Chinese soybean imports at just 90 million metric tons versus USDA's official estimate of 96 million metric tons.
That's a little bit of a difference on the balance sheet, Brian. If you were to trim 6 million off Chinese imports, I mean, that kind of changes things around a little bit, don't you think?
It does. That would be flat price bearish, and I think you could still see spreads trade strong. We've got May July soybeans trading at plus 32 right now. So you've got domestic things like very good crush margins, which I think will keep the pipeline pretty tight here. But something like this, if in the long run, especially as we work through the Brazilian bean crop, I think is going to be heavy on flat price.
We'll get to export sales here in a couple of minutes. Our export sales were terrible last week, and China's not supposed to be buying beans from the U.S. this time of year, anyways. But if you have this combination of like, okay, you've got this monster Brazilian crop, and there's still some debate about how big it is. I mean, there's still a couple groups floating out there with like a 156, 157. So if you were to take like the most bearish of scenarios and say like the stone number's right and it's 157 and the Chinese imports are only 90, like that's a pretty it's a much more bearish global situation than what we had thought maybe.
Yeah, it's an 8 to 9 million ton difference in what we're trading, from the mindset that we're in right now.
This seems to be the thing that's like top of mind this week when it comes to the bean market, especially given this sell off we've seen here the last couple of days. Let's get to the weather.
So, rain is pushing across parts of the U.S. Corn Belt and southern United States here this morning. This morning's system covers parts of Illinois, Indiana, and areas further south. Cooler temperatures will be an issue for a good chunk of the country this weekend. Areas that will see lows below the freezing point include North Dakota, South Dakota, Minnesota, Iowa, Wisconsin, and Nebraska. Temperatures are likely to remain below normal across the Corn Belt until the first week of May. Rain chances in western Kansas and other drought-stricken HRW wheat areas have been reduced compared to yesterday.
I knew that forecast yesterday was too good to be true. We saw this forecast yesterday. The Euro model, this same map yesterday, was talking like 3 inches of rain, even 4 inches of rain locally in western Kansas. And now it's like an inch. These northwest areas might see less than an inch. Brian, what are you hearing from people in these areas? I mean, it's pretty bad.
Yeah, some of the recent rain events have done a little bit to improve the crop, but it's definitely not a crop saving event. And the way that these forecasts continue to work, it's always the same story. It's like a week out, you have all these chances of precip because the models want to revert back to normal, and then it just seems like as you get closer to when this rain is supposed to verify, it just doesn't pan out the way that it's been forecasted. But bottom line is if we can get some of this rain, especially at this time of year, it will help improve the crop. And the market has been extremely volatile. And here we are right back down to the recent lows here. And again, we've been seeing these 50 to 60 cent swings in hard red wheat, and we're right back down to the low end of the range after failing at the upper end of the range this week.
Mackenzie, you're in central Nebraska. How dry is it where you are?
Oh, it's incredibly dry. We haven't been this dry for the past 10 years. I mean, a week ago yesterday, we were battling fires all throughout the area. It's bad. I mean, if you dig down, we fixed fence earlier this week. If you dig down about 4 to 6 inches, there's some moisture down there, but the topsoil is dry as a bone. The hills look terrible here in the sand hills. It just doesn't handle the heat and the wind that bad. And that's one thing that's really hurt us this year is the winds have been terrible. There's a chance of rain next week, but I don't know. Things look pretty poor going into the summer right now.
Does it seem like every time there's a chance of rain, it's like it's just that it's a chance and then it just doesn't rain?
Yeah, exactly. Like, so if we look at Tuesday, Wednesday, I think we have like a 50-60% chance. Tomorrow it'll be dropped down to like a 30%. And by the time we get to Monday, it's just going to be gone.
Yeah. The one other thing I wanted to mention here is this flooding in the Red River Valley up north. This is an issue, and we knew that this was going to be an issue. The one thing that I read this morning suggested that it actually may not ultimately be as bad as what they had thought. Brian, are you hearing anything about planting progress or lack thereof up north? I mean, I don't think there's much going on in some of these areas.
No, there's not. I talked to some producers yesterday in Minnesota, and they had just gotten some snow the previous week, and then some more rain here, and they're going to be out of the field for the next couple of weeks. So it's going to be a delayed issue there, and then as time goes by, it's going to become more and more of a conversation about potential prevent plant.
Yeah. Mackenzie, what's next?
So the nearby May-July corn spread posted fresh highs again yesterday. Despite flat price weakness late this week, spread action has been strong. Farmer sales typically slow during planting season, and this year is no exception. Cash corn bids across the country maintain strength.
Brian, you're a chart person. What does this chart look like to you?
It's a runaway, and we've seen this type of spread action before. I think 2013 and 2021 would be the 2 years that would most likely resemble what we're doing right now. And we've seen this spread in those 2 years either top out in this general area, which I think was around the 35 area one of those years. The other year, it actually got into the 60s prior to first notice day. So I think if the flat price continues to kind of stay weak, then the spread's going to have more work to do. And I think you're going to continue to see this thing trade strong into next Friday before we go into delivery.
So what happens when the May contract goes off the board? Is it a question of what does the end user get bought here in the next few weeks? I mean, is that the question, or is this thing just going to stay tight and the July is going to pick up the slack?
So I think what'll happen, and again, we'll look at the previous couple of years that we've seen similar price action to this. We'll probably see things once May goes off the board, take a little bit of a breather. And then the expectation from our commercial guys that we work with would be that the July-September spread will then do the same type of activity. In those 2 years that we had mentioned previously, we had July trade a dollar plus over September. So that's going to be something that we look at is looking at that spread and loading up on that spread once this one's off the board.
I think the question that a lot of people would like to see answered, and nobody can answer this question, but is the July corn contract too cheap? Because once the May goes off, like the cash market's not going to magically change overnight. That's the question that I think a lot of farmers probably have on their minds, especially if you're still holding old crop bushels and you can't deliver them here during planting season. Let's get to Russia.
So a continued threat to the Black Sea grain deal may be in Russia's best interest, according to Politico. Moscow said this week that the outlook for an extension for the deal is not looking good. Russia sent a letter to the Joint Coordination Committee of the Black Sea Grain Initiative, warning that ship registrations would only continue until May 18th. Politico noted it's an opportune moment for Russia to try to milk concessions. Former USDA economist Joseph Glauber said the market takes it with a pinch of salt. If there were indications that this was going to be abrogated, I think you'd see the market respond. Russia's foreign minister said yesterday that almost nothing has been done to address Moscow's concerns regarding the grain deal.
I love this article because they talk about how Russia could be bluffing, which has been my thought the whole time, is like they renewed the deal twice without any sort of sanction relief, any sort of anything. And this article kind of hints at that. I actually wish they would have went into it a little bit more. And then they had, I think there was one economist who was like a former USDA chief economist who said something about the markets. And I don't know if this guy knows anything more about the markets than we do, but he said, if the market believed that the deal wouldn't be renewed, it would be, we'd be doing something, and we're not.
Correct. I think we've been talking about this type of story for the last several months.
I know. I'm sick of it.
We did it, about a month prior to the renegotiation back in March. We knew that it was something that needed to be renegotiated, and this was the type of headline that we were getting. That is it not going to happen? Is it going to happen? And why wouldn't Russia try and throw that type of narrative out there just to see what they can get out of it before we renewed the deal?
Politico had this chart of Ukraine's Black Sea grain exports, and I mean, since the grain deal was struck, I mean, yeah, the grain deal is great, but you're still half of what you were prior to the grain deal. And this is why you've got these issues with this glut of Ukrainian grain in Eastern Europe and all that sort of messy stuff. So, I mean, it's still a mess. I think most people believe, I think the trade believes the deal is going to be extended, would be my guess. I think we've got some more Ukraine stuff.
Yes.
Russia stuff, sorry.
Ukraine's key allies are considering a ban on exports to Russia. G7 officials are discussing an outright ban on the majority of exports to Russia. The plan, which is being discussed ahead of the G7 summit, which is scheduled in Japan in May, calls for including EU member states in the crackdown. If implemented, the plan would ban all exports to Russia unless exempted. Sanctions have already halted massive exports, as we all know. However, Russia has been able to bypass some of those sanctions by importing U.S. and European goods through third countries. A near total ban on exports to Russia could drive Moscow even closer to China and result in Russian retaliation. The proposal is still being debated and could completely change.
Brian, here's a list of the things that the West it sends to Russia in terms of exports to Russia: electronics, luxury items, cars, chocolate, beer, footwear, flowers, and makeup. This is not a grain story, but it's a geopolitical story.
Yeah, and nothing on that list that you just read off gets me very excited, Joe.
Oh, really?
Yeah.
I mean, they want their chocolates and their beers. I don't know.
Well, the footwear maybe, right? Yeah.
Yeah, I mean, Putin, he's pretty well dressed. I mean, you would think he'd want to maintain his appearances. What about export sales?
So, weekly U.S. export sales were poor yesterday. Net corn sales for the current marketing year totaled just 312,400 metric tons. The print was down 41% for the week and down 79% from the prior 4-week average. China, Saudi Arabia, and Colombia were the largest buyers. Accumulated corn sales for the current marketing year are down 33% versus the same period last year. Soybean sales were poor at 100,000 metric tons. The print was down 73% versus the previous week and down 58% from the prior 4-week average. Wheat sales were strong at 259,000 metric tons.
Yeah, it's not good.
We've been talking for months about how we need to see 1 million tons of corn sales per week, and this is a third of that, less than a third. So
Not good.
not good. The bean sales, I think a lot of people are surprised we're still actually doing bean business, but I think we also have to realize that this business will get on the books, and then likely a good chunk of it will be rolled to new crop at some point. And we should be seeing wheat sale. Geez, you look at wheat versus corn, and in the May contract, they're almost trading at even money here. So wheat is cheap relative to some of its competition. And I think we should continue to see, and maybe we'll see this in the June stocks report, but we should see some higher wheat for feed. And that was one of the things USDA did in the last report is they reduced the feed wheat. And I think we're going to see an increase in wheat for feed over the next couple of months.
I don't know why they did that. I didn't understand that. I mean, everybody had been talking about more wheat feeding, if anything, given the way prices are set up. And we don't have an export program to speak of. So I mean, I know that we don't have a ton of wheat because we've had drought issues, but it's going to be used somewhere.
Correct.
So I guess we have to find a price that makes it get used somewhere would be my thought. That corn number is not good. Is China done, you think?
Well,
I don't think they are.
No, I don't. And last time we talked, one of my thoughts was the last two expirations of contracts. So that would have been March and that would have been December. As we were going into delivery, we actually saw those contracts roll over into delivery and in delivery. That pushed values back down closer to $6 on the following contract, and then China came in and started buying. So here we are. This July contract is at roughly 6.25. And if we see additional weakness in the May contract in delivery, then that might push July closer to 6. And then I think China steps in again.
You predicted that scenario before. I like the prediction. Because, I mean, we could be at 6. July futures could be at 6 next week for all I know. What's next, boss?
So home prices posted their largest annual decline in 11 years. U.S. home sales in March decreased 2.4% from the previous month and 22% from a year ago. March marked the 13th time in the previous 14 months that sales had slowed. Rising mortgage rates, high home prices, and a lack of inventory frustrating buyers are blamed for the slowdown. High inflation and the prospect of a recession in the next 12 months are also keeping buyers on the sidelines. U.S. home building also slowed in March, falling 0.8% from February.
Okay, so prices are down. I mean, that's like the least surprising thing in the world. I'm surprised they haven't come down more, honestly. I feel like the real estate market's kind of sticky.
It's a weird market. I mean, there's not a lot of inventory, and maybe that's part of the problem is, if you bought a house in the last several years and you had it at a 30-year mortgage at very low interest rates, you're probably not real anxious to sell it unless you absolutely need to.
No, a lot of people are like stuck in their house. Like if you bought a house with a 3% mortgage, like you can't move now. Because what did it say the average mortgage rate was? 6.4 or something? Like, why would you swap? Why would you move Why would you trade your 3% mortgage? That's like a golden ticket. And now you're going to go, yeah, you get a slightly lower price, but I mean the cost of like mortgage every month is going to be tricky. Mackenzie, cattle market yesterday. What's the deal?
Yeah, so feeder and live cattle futures, they were up for the most part on Thursday. Feeders closed an average of 174 higher. Live cattle closed 62 cents higher. So far this week, cash cattle trade has been fairly light. Keep in mind, over the past 2 weeks, cash cattle prices have advanced $11.60. However, we're going to see those prices level out here this week. But we're still at record highs. So in the Southern Plains, live prices have been steady at 175 this week. Here in Nebraska, they've been steady to $2 lower at 182, and the Western Corn Belt has been unevenly steady at 181 to 183. Choice box beef had another positive day for the most part. End of the day at 306.99, up 107. Select end of the day at 288.74. That was down $2.72.
Is there a report today?
Yes, that's what I meant to say. Also, there's a cattle on feed report. We're expecting placements in cattle on feed to be down right around 5%.
Do you have a prediction for the report?
I think they're pretty darn close with those projections, 5%. The cattle aren't out there. Maybe it won't be that big of a drop. Maybe it'll be closer to 4%, but we're just going to continue to see that downward trend when it comes to the cattle on feed report.
Okay, the next time you make a prediction, you've got to make a really like outlandish prediction. And then if you're right, we'll talk about it extensively on Monday. And if you're wrong, we'll just forget about it. Brian, here's a cattle chart. What does this look like to you?
It's an uptrend. It's been very aggressive. We had some liquidation during that bank event, and the market came back extremely strong. You've got that gap there. You've actually got a gap a little bit lower too. So there's two gaps. Maybe we're looking for a third gap, which would be kind of that exhaustion gap. So that may come at some point here. But I think with the trade yesterday, which was kind of a macro day of selling, and the cattle were able to fight back, and you had the feeder cattle trade really strong. And one of the things we talked about recently was just how we had live cattle prices making new records, yet feeders were, $40 off of highs that we saw previously. Yeah. So it looked like feeders were cheap compared to live cattle.
Yeah, what was the macro stuff yesterday? Are people, it's just Fed stuff again? Is that what it is? Like, we know the Fed's going to hike one more time. I don't know why this is like surprising to people.
You got to trade something, Joe. I mean, you can't just...
That's a true statement. You do have to trade something. Outside markets this morning, guys, U.S. dollar's about flat. The S&P's down 9 points. The Dow's off 50. Gold's off $18. Crude oil off about 18 cents, floating just below 77 in the July WTI. Have a great weekend, guys. We'll talk to you next week, all right?
Yeah, back at you.